Good morning. We will pay attention to asset disposal today. An extract of the fixed asset register is provided. If we look at the dates that are required in this exercise, we see that the closing date is 30 June 2015. So that means the opening date for the current financial year was the 1st of July 2014. It's always very important to determine when is your current financial year, because you have to write off the depreciation for the number of months that the asset is used in the current year. Now, if we look at the information, we see that machine A cost 15,000 Rand. The accumulated depreciation is 5,400, and the purchase date was the 28th of February 2012. So that is before the current financial year. Machine B, cost price 28,000, was purchased on the 30th of June 2012. So that is also before the current financial year. And if we look at machine C, we see that the purchase date is the 30th of September 2014, and that is during our current year, because our current year is from the 1st of July 2014 to 30 June 2015. So machine C was purchased in the current year, and there will be no accumulated depreciation for previous years. Machine C was purchased on credit and was ready for use on 30 September 2014. So on machine C, we will only write off depreciation from the 1st of October 2014 up to the end of the financial year, 30 June 2015. On 31st of December 2014, machine B was sold for 10,000 Rand. So that means we sold this vehicle in the middle of the year, and we will only write off depreciation for the number of months that we use the asset. Depreciation is calculated at 20% per annum on the reducing balance or diminishing balance, or you can say carrying amount. On machine A, we will first work out the depreciation from the purchase date until the end of the current financial year, so that we've done all the calculations. So the purchase date of machine A was the 28th of February 2012. So we used it from the 28th of February up to the end of the financial year. We will not write off depreciation in February because we bought the machine on the last day. So we will write off depreciation for March, April, May, June. That means for 4 months. The cost price of machine A was 15,000. So we will write off depreciation at 15,000 for 4 months, and that will give us 1,000 Rand. In the next year, we used it from the first day of the financial year, the 1st of July, up to the last day of that financial year, 30 June. Because it's diminishing balance, we have to take the cost price less the depreciation up to the end of the previous year, 1,000, and calculate 20% on the 14,000, and that will give me 2,800. The following year, we will work out from the first day of the financial year, 1 July 2013, up to the last day of that financial year, 30 June 2014. The cost price is 15. Now we've already written off 1,000 in the first year and 2,800 in the second year, so we have to subtract all the accumulated depreciation and multiply with 20%, and that will give me 2240. In the current year, we will use it from the 1st of July 2014 up to 30 June 2015. Cost price 15,000 minus all the accumulated depreciation, 1,000, 2,800 and 2,240. We use machine A for the full year, so we will calculate 20%, and that means that the depreciation for the current year on machine A will be 1792. On machine B, we purchased it on the 30th of September 2012, and we sold it for 10,000 on the 31st of December 2014. So on machine B, we will calculate from the purchase date 30 September 2012 up to the end of the financial year, 30 June 2013. On the cost price of 28,000, we will not write off depreciation for September because we bought it on the last day. So it's October, November, December, and 6 months in 2013. And we will calculate depreciation for 9 months. And that will give me 4,200. Then the following year, we used it from the 1st of July 2013 up to 30 June 2014. We will subtract the 4,200 from the cost price and calculate depreciation for the 12 months. In the current year, we are selling this machine, so we used it from the first day of the financial year until the date that we sold the machine, the 31st of December. 28,000 minus the 4,200 in the first year minus the 4,760 in the second year, and we only used it for 6 months. So my depreciation for the current year, that is step number 1 when I do asset disposal, will be 1,904. In step number 3 of asset disposal, I have to determine what is the total accumulated depreciation from the purchase date until the sales date. So that gives me 10,864. On machine C, we purchased during the current year on 30 September 2014. We will calculate depreciation up to the end of the year. The cost price of machine C is 63,000, and we will calculate on the 63,000 for 9 months, and that will give me 9,450. We will now complete the transactions for the asset disposal, and we will first complete it in the general journal. Now, the first entry for asset disposal is to determine the depreciation for the current year, and we calculated that that would be 1,904. We will debit depreciation to increase the expense on the debit side with the 1,904. We will credit accumulated depreciation because accumulated depreciation is a negative asset and will increase on the credit side every year until the accumulated depreciation is equal to the cost price. And we only wrote off depreciation for 6 months in this year because we only used it for 6 months before we disposed of the asset. Number 2 is to transfer the machine to the asset disposal account. So in my step number 2, I will indicate that machinery is an asset with a debit balance. So if I want to take it out of the machinery account to indicate that my assets decrease, I will credit machinery with the cost price, and I will transfer it to the asset disposal account on the debit side. Step number 3 is to see what is the total accumulated depreciation from the purchase date until the date that we sell the asset, and we calculated that that is 10,864. So I will reduce my accumulated depreciation to take it out of the account. Accumulated depreciation has a credit balance. So if I want to take it out, I have to debit accumulated depreciation, and I will credit the asset disposal account with the total accumulated depreciation for the full period. In step number 4, we must see if we traded in the asset, whether we sold it, whether it was an accident, and how much money did we get. So they say that we sold it for 10,000 Rand. So my step number 4 will be to record the sales transaction. So the bank account is debited because the money in the bank increases. Asset disposal is credited with the money received. And then we will balance our asset disposal account to determine what is the difference between the debit side and the credit side. So if I look at my asset disposal account, I have 28,000 on the debit side. That was the cost price. On the credit side, I have 10,864. That is my accumulated depreciation. And I have 10,000 on the credit side for the money that we received. So if I balance my asset disposal account, I will see that the credit side is smaller than the debit side. So there's a difference of 7,136 between the credit and debit side, and that means that we made a loss. So the asset disposal account must be credited. Loss is an expense. Expenses always increase on the debit side with 7,136. And now we've completed all 5 our transactions. You could also look at the carrying amount and say that the carrying amount is 28 minus 10,864. So that gives me 17,146. And if we receive less than the carrying amount, it means that we made a loss. If we receive more than the carrying amount, we made a profit. At the end of the year, we have to write off depreciation on all the assets in our possession. We calculated that on machine A, the depreciation for the current year is 1,792, and on machine C, the depreciation is 9,450. So we will record the entry adding these two figures together to determine what is the total depreciation that we write off on existing assets that we are still using at the end of the year. And we will debit the depreciation account with the total amount and credit the accumulated depreciation amount with the depreciation on vehicle A and C. When we complete the ledger accounts, we must determine what was our opening balance in the machinery account at the beginning of the financial year. We had machine A and B at the beginning of the year, so we will add the cost price of A and B together, and that will give me 43,000. Then we bought an additional machine during the year for 63,000. So that means my machinery, that's an asset, increases on the debit side. The accumulated depreciation is my negative asset and will therefore have a credit balance because it will reduce the machinery account. So these two accounts, machinery and accumulated depreciation, is actually one account. Machinery increases the asset on the debit side, and accumulated depreciation decreases the asset on the credit side. To calculate the opening balance of your accumulated depreciation account, you must determine how much depreciation was written off on machine A and B up to the end of the previous year. And if we look at our calculation, up to the end of the previous year, we've written off depreciation on vehicle A, 1,000, 2,800, 2,240, and if I add that up, I get 6,040. And on machine B, up to the end of the previous year, we've written off 8,960. So I will add those two amounts together to determine what was my opening balance in the accumulated depreciation account at the beginning of the year. Step 1 for asset disposal will be to record the depreciation for the current year so that we can get all the information about our asset up to date. Depreciation is an expense, and expenses increase on the debit side. So I will debit my depreciation account with the depreciation for the number of months that we used it in the current year, and I will credit my accumulated depreciation account. Step number 2, I have to show that I don't have this asset anymore, so I have to reduce my asset on the credit side with a cost price of 28,000 and transfer my double entry to the debit side of the asset disposal account. Accumulated depreciation has a credit balance. So if I want to remove the accumulated depreciation on the asset that we are selling, I will debit my accumulated depreciation account and complete the double entry on the credit side of asset disposal. Step number 4 is I must determine how much money do I get, and the bank account is debited with the 10,000 and asset disposal is credited with 10,000. Now I can determine what is the difference between my carrying amount and the money that I received to determine whether we made a profit or a loss. So I can add up the debit side of the asset disposal account, subtract the 10,864 and the 10,000, and the balancing figure will tell me that we made a loss of 7,136. At the end of the year, we have to write off depreciation on the assets that we are still using. So that will be on asset number A that we used for the full year, and asset number C that we purchased during the year. Although we have asset A and C, we will only record the depreciation as one amount to increase my depreciation to the total expense for the year. And I will credit my accumulated depreciation account with the depreciation on asset A and C. Depreciation will always be written off to the profit and loss at the end of the year, so I will credit my depreciation account and indicate that I will transfer this amount as an expense to my profit and loss account. Loss on sale of asset is also expense, and at the end of the year I will transfer this expense to the profit and loss account to reduce the profits with the loss of 7136. In my balance sheet accounts, I will balance my accounts to determine what is the closing balance. So I will add up the amounts on the credit side, subtract the amount on the debit side, and determine what is my closing balance that will be carried over to the next financial year. Machinery account is also an asset. I will add up the debit side, subtract the credit side, and determine what is the value of my machinery at cost price in the machinery account at the end of the year. If I want to complete the note, I will take all the information in my machinery account and an accumulated depreciation account to determine the note. Every figure in these two accounts must be recorded in the note, otherwise the note will not balance. The opening balance for machinery was 43,000 and the opening balance for accumulated depreciation 10,240. I will start my note with the opening cost price of 43,000, the opening accumulated depreciation, and I will subtract the two amounts from each other to determine what is the value of my asset at the beginning of the year. So I do a calculation to determine the carrying amount at the beginning of the year. I will determine what was the total depreciation that was written off during this current year. We wrote off depreciation on the asset that we've sold, and we wrote off depreciation on the two remaining vehicles at the end of the year. And I will add those two figures together to indicate what is my total depreciation at the end of the year. I will add these two figures and indicate that the total amount that decreased the value of my assets for depreciation is 13,146. To determine the amount for asset disposal, that is what was the value of my asset at the date that I've sold it, I have to calculate the carrying amount. So I will look at the cost price of the asset, 28,000, the total accumulated depreciation, 10,864, and if I subtract that from each other, I get the carrying amount. So I will subtract them and I will show that we sold this asset. So the value of my assets decrease and therefore the amount will be in brackets. So accumulated depreciation and asset disposal will be in brackets to indicate that the amounts reduce the value of your asset and must be subtracted. We purchased an additional asset for 63,000, so we have to show in our note that the assets increased with 63,000. And there's an addition of 63,000, and this is a positive figure because it will increase my assets. Then I will do a calculation, 63 minus 17,136 minus 13,146, and that will give me my total movements during the year. The closing balances in my machinery account is 78,000, and my closing balance in the accumulated depreciation account is 12,522. I will show those two figures as my closing balance at cost and accumulated depreciation, subtract them from each other to determine what is the carrying amount at the end of the year. Then I can check myself to ensure that I didn't make mistakes. So if I take the carrying amount at the beginning of the year plus the movements during the year, it must also give me 65,478. What did we learn? When a fixed asset is sold, you must first of all determine whether accumulated depreciation until the end of the previous year was given, because then you don't have to calculate the previous year's amounts. If they don't give you the accumulated depreciation up to the end of the previous year, they will give you the date that this fixed asset was purchased, and you will have to determine what was the total accumulated depreciation from the purchase date until the date that the asset is sold. When the accumulated depreciation on the disposed asset until the end of the previous year is given, you will only calculate depreciation for the current year. When the purchase date is given, you have to calculate depreciation from the purchase date until the date that you sell this asset. When we complete the transactions for asset disposal, we have 5 steps. Step number 1, we will calculate depreciation for the current year for the number of months that we use the asset in the current year, and will debit depreciation and credit accumulated depreciation. Then we will transfer the costs from the asset account to the asset disposal account to indicate that our assets decrease because we don't possess this asset anymore. Assets have a debit balance, so if we want to take it out, we will credit the asset account and debit the asset disposal account. Then we will transfer the accumulated depreciation to asset disposal. I will determine what is the total accumulated depreciation from the purchase date until the date that we sell the asset, and this total amount will be removed from my accumulated depreciation account on the debit side and transferred to the credit side of the asset disposal account. Then we will record the sales transaction, determining whether the asset was sold for cash, on credit, or traded in. And after we recorded all 4 of those transactions, we can determine whether we made a profit or a loss. At the end of the year, we have to record depreciation for the machines that we are still using. The machine that was purchased during previous years, we've used for the full 12 months, so we will write off depreciation for 12 months. On the machine that we purchased during the current year, we determine how many months did we use it in the current year, and we will only write off depreciation for 9 months.